Hello everyone, welcome back to the Unemployed CEO. I'm Rohit. For now, those who don't know me, I'm a professional trader. I work in stock, ETF, forex, crypto, binary, anywhere in market where I can make money. And today I'm back with a new video that is intraday strategy for stock market. Now, in this strategy, it is all about gap up and gap down. Now, many of you might be thinking that you already know how to trade gap up and gap down, and maybe you're thinking this strategy doesn't work that much. But if you trade the way I trade for gap up and gap down, I'm 100% sure that you will make consistent profit in this strategy. So let's go through this strategy after this short intro. Now, before we begin for today's strategy, I strongly recommend you to please visit my website, theunemployedceo.org. On this website, you'll get different guides for stock, forex and binary, which are specially designed maybe, where you'll find lessons and videos which will help you from scratch to the professional level so that you become a professional trader which can make consistent profit day in and day out.
So this is my Telegram channel, the Unemployed CEO, and I also have WhatsApp group. So you can join any of it, like Telegram or WhatsApp, depending on what you want to join. The messages are same on both sides. So I give 4 stocks to trade on daily basis with entry point, stop loss, and target points, so that you can make profit using those levels if you want to. And also share some more good patterns if I found in the market, and also share that where to trade, like what should be your entry price, and you can make at least a 0.3% and get out of that stock, so that you can make good amount of consistent profit day in and day out. So I maintain the weekly report, like how much profit did we made for that week and how much loss. So like for this week we made we hit stop loss in 3 and we made profit in 19 trades. So our overall profit to loss ratio was 86.36%. And we also maintain that for a monthly basis also. So you can see for this month we hit stop loss in 10 trades and we made profit in 60 trades. So overall profit to loss ratio was 85.71%, which is consistent, and we have maintained more than 80% of profit making for weekly and also for the monthly basis. So for now, for those who are watching, I have a very special offer. I am going to launch a very good offer, so that you can join any of my this group and request me for 1 week of free trial. Just join this group, the links are given in description, and you just text me that you want a demo trial. So I will join you to my premium group, where you will get 4 stocks to trade on daily basis with entry points, stop loss and target profit points. And if I found more good patterns, I will also share that with you, so that you can make good profit. So this will be just for 1 week on a trial basis. If you want, you can continue further. So let's start our today's strategy on gap up and gap down. So what is gap up and gap down strategy? So we are going to take trades in only those stocks which are either gapping up or gapping down. So for those who don't know what is gap up and gap down, I'll explain in short. So what is gap up? If the stock price opens above the high of the previous day. So for example, any stock hits a certain high of 100, and if next day, like for today day, the stock opens price above the 100, so we say that stock is gapping up. And same is for gap down. If the stock price opens below the low of the previous day, we say it as gap down. Now let's see what conditions we need to follow so that we can take trade. So there is only one condition, that the stock price should either open above the high or above the low of the previous day, so that is either gapping up or gapping down. Now let's see what trade setup we need to keep. So there are 3 conditions for this particular strategy. So we have to put our chart for candlestick. You can also go for bar, any type of candles, like any type of price where you can easily mark or easily visible the high and low of the previous day. So that is important, nothing else. So I prefer you go with candlestick, so it is very easy to observe the high and low of the previous day. The next condition is the time frame that you should use. Now it should be of 1 hour. So now you are doing intraday. So most of the intraday traders use 5 minutes and 50 minutes candle to take trades. But for this particular strategy, we are going to use 1 hour candle. So that's why I was saying that you have to learn about how to trade in gap up and gap down. But this particular strategy, you'll find we are trading on 1 hour candle, and that is what makes the most of the difference. The third thing is volume. In my previous videos I also said that we have to always look for volume, because that is the best indicator that you can get rather than all other. So I'll tell how to use this volume when we go for live examples, but now let's see what we have to see, but what we have to look for it. So we have to look for 1 hour candle which is either gapping up or gapping down, and we'll observe only 0.3% of movement, so that we'll book the profits after 0.3 or 0.5, and we'll get out of stock without being greedy, because we have to make profit of only point. We have to take the what we say, we have to take the advantage of only 0.3% or 0.5% without margin. Like if you're going without margin 0.3%, then with margin you're making like more than 3 to 4.5% on each single trade that you're taking. That is, you're increasing your portfolio by 3% on daily basis. Now let's see some live examples and how you can trade on it. So let's begin for some live examples and how to trade. So you see this was the previous day, this was the high made by the candle for that day, and this is the low. So next day for like this was the 17th of May, and this is the candle for 20 of the May, means after Saturday, Sunday or some holiday. You see the market gapped up and the price is open above the high of the previous day. So after the 1 hour is complete, you have to mark the high and the low of the candle. Now once you mark the high and low of the candle, you have to just wait until the price breaks either high or low of the first hour candle. You see this is the first 1 hour candles. You see all these are all 1 hour candles. So you have to wait until the price breaks either high or low. Once it breaks in certain direction, like for here it breaks the high, you have to go for buy side. You have to book your 0.3% and get out the stock. So it depends upon you, either you are a conservative trader, so you can be like me, you book 0.3 to 0.5%, get out the stock on daily basis, and you make good amount of profit. Or you can be a risky trader and trail your stop loss, so that you can ride the massive rally which can give huge amount of reward. But I prefer to book at least 0.3% on each single trade that we take, and for this strategy it is meant to make you at least 0.3% if you follow certain conditions like the setup I told you and the conditions that I told you. So you see this is the 20, this is the till 21 of May, and you see this was 22nd. So this is the candle of 22nd. Yes, this is the high made by the candle for that day, for 22nd May, and this is the low. So you see the next day the candle gap up, it is above the high, so this is called a gapping up. So we mark the, after 1 hour we mark the high and low of the candle, and you see the market break the high, you go for buy direction, you book your 0.3%, you get out of the stock. So here also you have booked your 0.3%, you went out of the stock. Now let's see some other example. Like here is Asian Paints. You see this is the, okay, sorry, now you see this is the one day where this was the high of the candle, this is the low that the candle made, and the next day the candle gap up. This is 1 hour candle, so you mark the high and low of the candle. As soon as the high or low break, like for example here high was break, you go for buy side, and if the low is break, you go for sell side, you book your 0.3%, you get out of the stock. Now next thing, you see this is the 1 day candle where this was the high and this was the low. Now the price open, this is the price open gap, the gap up, this is also called a gap up, but our condition was it should open above the high of the previous day or either low of the previous day. So you see the condition was not satisfied, so we are not going to take trade in this case. The next was, you see this is the high for the day and this is the low for the day. So for this day, the previous day, the next candle means the next day, the candle open gap up, and you see after 1 hour is complete, you mark the what we say, the low and high of the candle, and once it is break, like for this example it was broken high side, we go for buy signal, you book our 0.3%, you get out of the stock. Now these are the now you can see this is the list that I have taken, and these are the stocks that either gap up or gap down for last 30 days, and these are stocks from Nifty 50. Now I have observed that this strategy works very good in for the stocks which are listed in Nifty 50, Now what this directly or indirectly means that Nifty 50 are the stocks which has good amount of volume. So these stocks, like for example, this strategy work good for the stocks which has good amount of volume. So if you are using some kind of scanner or a filter to filter out the stocks, so you can, while you give order for your scanner to either find the gap up or gap down, you have to point out that you have to see in which stocks the volume there is the like which are the volume gainers. You should look for the stock which are volume gainers. So you can go for NSE site, NSE India website, the official website for National Stock Exchange India. There also you can find the top gainers and top losers. So there also you can find which stocks are either gapping up or gapping down, and there you also find the section for volume gainers. And if you find the stock which is gap up or gap down with the volume gainers, so you can find that stock for this strategy, and after 1 hour you can mark the high and low. If that is broke, you can go for the particular side, you can make your profit. So this is the Axis Bank. You see this was the last day, previous day, this was the high made. So the next day the candle gap up, you mark the high and low after the one single hour, and you see you made a good amount of profit. But we have to look only to make at least 0.3%. Now you are seeing very large candles on this side. Now this is for Saturday, the dummy trade that zero the ranges. So you can try. This is the fake, or we can say this is a paper trading. So don't look at these candles, because next day they will go out of the trade. So now let's go for one more stock. I have sorted from all the stocks from Nifty 50. Okay. Because this strategy works really good for stocks which are listed in Nifty. So you see here, this is the high made by the candles for the previous day, and next day the stock gap up. This is the 1 hour candle. So we mark the high and low. As soon as the high is broken, we go for the trade. We book a 0.3%. We get out of the stock. So you also see here, this is for 16th date, and this is for 17th. So this is the high made by the candle. This is the low. The next day the candle gap up. The candle open over here. So we wait for 1 hour. So this was the high made. This was the low made. And of the next candle didn't break the high or low either, but the third candle, like for third hour, it broke the high. We book our 0.3%. We will get out of the stock. So you see any gap up or gap down more? No. So let's see more examples. Okay, now this is very good example. You see, this was the high made by the candle. This was the low. The stock made gap up. So there was gapping up, but the candle didn't break in the high side. The candle breaks the low, so we go for downside, as there was the filling of the gap that was being made due to some news come out of the stock. So the gaps up or gap down is usually formed due to some reports or the earnings or the news came for the particular stock, which makes people to either buy or sell that stock very strongly, which makes the stock, just for a second, excuse me. Okay, which makes the stock either gap up or gap down. So now let's see some more example. The example. Okay, a good example over here. You see, this was the previous day high and this was the previous day low. The next day the gap up, the candle, this is the first hour candle. So we mark the high and low. We wait for the high or low to break. So you see there was a high broke, you book your 0.3%, you get out of the stock. Okay. One more, you see here there was a gap up. Here also there was a gap up. This is above the high and this is also above the high of the previous day. So it broke the, what we say, the high of the previous day. We book your 0.3%, you get out of stock. The next day the price was gap up, the high was broken, you take the buy trade, you make a profit, you get out of the stock. Why I'm not finding an example for gap down? Okay, very good example. You see, this was the low for the previous day, this was the high, the stock gap down. We wait for the 1 hour to complete, we mark the high and low, the low was broken, you took the sell side, you make your 0.3%, get out of the stock. Some gap down examples to show you. Okay, any trade in this. Okay, here also you see this was the high made by the previous day candle. This was the low. So the market open, started reversing the direction. After 1 hour, this was the high, this was the low. The low broke, we go for downside, we book your 0.3%, we get out of the stock. So I want you to go for your Nifty 50 charts and do back test of this strategy, so that you gain more confidence for this strategy, so that you can work well on this strategy, so that you can make good amount of profit. So you see here also there was a gap up. This was the high, the stock opened at a gap up, and after 2 hours the high was broken, you book your 0.3% and you get out of stock. Here also you see this was the high made for the previous day. The next day candle opens above the high price. After 1 hour, we mark the high and low. As soon as the high is broken, we go for high side. Now for this particular example, the high is also broken. You made a profit in upper direction, and there is also sell direction. But I suggest you to go for only first signal, not for the second. Okay, that will be better, because we have to work on certain rules. Because if you break the rules, you'll be punished by the market. So we have to follow some rules. Now let's go for last 1-2 examples, so that video doesn't get too big. I hope the idea is clear. Now you see here, this was the day where this was the low of the candle and this was the high. The stock was gapped down. We wait for 1 hour. This was the low made by the candle, this was the high made by the candle. As soon as the low was break, we go for sell side, we book our 0.3%, we get out of the stock. Here also you can see this is the gap up example. The stock was gap up. So you find very good examples. Here also you can see the stock was gap up and you book your 0.3%. So let's see the last example for Nifty 50. You see, whenever there is gap up, you wait for 1 hour and you can book your 0.3% as soon as the 1 hour candle breaks it high or low. Like for next example, you see here also the high was broken, you go for high upside, you book your profit. Here also you can see this was the gap up. The market didn't broke the high for the previous day, but it broke the low of the first hour candle. You go for sell side, you book your 0.3. So also for Nifty you can go for calls when the market is either gapping up or gapping down. Here also you can see the market gap up, broke the low, you can book your 0.3, you can get out of the stock. So this strategy works very excellently for the stocks which are listed in Nifty 50, which is also a good indication that it works for stocks which has volume. So what I suggest for the conservative traders, that as soon as you mark the first hour candle, the high and low of first hour candle, what I want to do is you go for 5 minutes candle. You go for chart for 5 minutes, and then you should watch for that high or that 1 hour candle to break with the 5 minutes candle having good amount of volume, which will actually make confident you confident about that the trade you are taking is the trade the most of the traders are saying. That means the high has been broken, so the market has very good chance to break in the forward direction and price to move above. Same for the low. If you see the stock has now going to cross the price in breaking the low of the 1 hour candle, like the low of the candle is going to break, so you should switch your chart for 5 minutes if you want to be more sure. And if you see that 5 minute candle is breaking the low of the candle with good volume, so it will confirm you that you are going to make at least 0.3% with very good, the chances are very high. So I hope the strategy is clear to each and everyone, that the price that it should open above the high or low, and once it opens higher or low, above the high or low, you should wait for 1 hour, so you can scan all Nifty 50 stocks which are either gapping or gapping down for that day. And if you find any stock, you have to just wait for 1 hour to mark its high and low, and as soon as its high or low is broken, you have to go for the direction. If it broke high, you should go for buy signal. If it breaks for low, you should go for sell signal. You should book your 0.3%, and you should get out the stock. So if you like this video, please like, comment, share, do whatever thing you can do for me, so that it motivates me to post more and more good kind of strategies which will help you to make more amount of percentage of profit. uh, I also want you welcome to my channel, like Telegram or WhatsApp. Join me there so we can share our ideas, our trade, and we can make good amount of profit on daily basis. And I want also to you to check my website. And thank you. Stay tuned for our next strategy. Thank you.